Hello everyone, welcome to the channel and let's get right into today's main event, the valuation of WWE Stock World Wrestling Entertainment. Let me preface this video by saying that I'm a WWE fan. I've been watching WWE for many years and enjoy seeing matches with the larger-than-life characters like Stone Cold Steve Austin, The Rock, Triple H, The Undertaker, Shawn Michaels, Triple H, Bret Hart, Razor Ramon, and of course, Mr. McMahon. As a reminder, this is not financial advice. This video is for entertainment purposes only. Always consult an investment advisor, do your own due diligence, and only risk what you're willing to lose. By way of introduction to those of you who are still not familiar with World Wrestling Entertainment, it is an integrated media and entertainment company. WWE is engaged in the production and distribution of wrestling entertainment content through various channels, like network television, live events, and consumer products. The company is a globally recognized brand, as can be seen by the millions and millions of fans it has on its various social media platforms like Facebook, YouTube, Instagram, and Twitter. That's only on the official WWE channels. The WWE superstars have their own media channels, and those have millions of followers as well. So there's no question that the company has a loyal fan base, which is very valuable for advertisers. Let's have a quick look at the WWE share price, currently trading about $51.37. Of course, it might change by the time you see this video. The 52-week range is between $41 and $70. I also like to see, in terms of the options, if there's something unusual there. I try to look for high open interest amounts at different strike prices, and we can see from the information above that the January 60 calls have an unusually high open interest amount. In essence, a lot of people are betting that when January 2022 rolls around, the stock price will be at least $60. Looking at the analyst forecasts, there are currently 8 analysts following WWE. Their target prices range from $45 on the low end to $75 on the high end, with the average being $61.88. We can see that this analyst Stephen Cahal from Wells Fargo has the low end estimate of $45, and Curry Baker from Guggenheim has a target price of $75. The top-rated analyst Laura Martin from Needham has a target price of $65 on WWE stock. While I'm also here, I'll take a look at the technical indicators section, and as we can see from this section, there are a lot of bearish indicators for the stock right now when looking at all events, daily events, or weekly events. That's not a good sign. Let's also have a look at some research reports. Morningstar has a forecast of about $43 for the stock, and they are using various quantitative models to arrive at this price. Next up, the Argus report. It provides some indication on financial ratios, so we can see trends according to what they're calculating. What jumped at me here is that the ratio of current assets to current liabilities, dropped over the past few years, as well as the interest coverage, which means that they generated less cash flow to cover any interest expenses. Now, let's examine insider trading. There hasn't been a lot of activity, but most of the activity is on the sell side, so that's not a good indicator. However, the recent sales have not been massive amounts, so that provides some level of comfort. And so now we get to the financial modeling section of this video. I started by looking at the quarterly information for WWE from 2017 until now. For the fourth quarter of 2021, I used the company's guidance to arrive at a level for 2021 overall that is just below their guidance. Next, I did a quarterly change report to see if there's anything that jumps at me. I consolidated the quarterly income statements into annual statements and then proceeded to create sections for percentage of total revenue and annual change percentages. These ratios will be useful when we're doing the forecasting in the next few steps. WWE also provides operational metrics such as number of live events, number of average attendees per event, how many orders were made on WWEshop.com, and what's the average spend per capita in a live event. We can see that from 2015 onwards, total live event attendance has dropped for WWE events. The following two charts show the weekly audience for WWE Raw and Smackdown. Unfortunately for the two shows, viewership is declining, and it's more evident for Raw. Now we get to the financial theory of the model. I started by estimating the cost of equity for WWE. The cost of equity is the return that shareholders would expect for holding WWE stock. Based on two methods, I arrived at a cost of equity of 12.15%. Next, I estimated the WACC, weighted average cost of capital. Simply, what it means is taking the market value of the debt and equity, taking their weights, taking their rates, applying the tax effect, and then when adding all the components together, we'll arrive at a weighted average cost of capital of 11.08%. We also have to ask, what are the current issues with WWE? Over the past year, the company has released a lot of its talent, blaming budget cuts. This creates negative morale inside the company and also provides a negative sentiment from potential new talent outside the company. For the past few years, the company has not invested in creating larger-than-life superstars like in the Attitude Era. Instead, it relies on older talent for one-off appearances. There are also inconsistent and repetitive storylines which upset the viewers. Some say that now Raw is 3 hours and that's just too much. It's hard to concentrate for 3 hours. At one point there were also too many WWE shows, 205 Live, NXT, and so on. So there's viewership fatigue. Since WWE uploads a lot of its content to YouTube, viewers might opt to watch a few 3 to 5 minute clips as opposed to watching a 3-hour Raw. In terms of shifting demographics, what worked before in the late 90s, early 2000s to attract the 18 to 45 demographics might not be the same today to attract the same demographic audience. In past years, when WrestleMania tickets went on sale, the event would sell out almost immediately. However, when it comes to next year's WrestleMania, it has not sold out. Tickets are still available. As you can see from the following seating charts, there are various tickets at various price points still available. There are also reports that WWE is struggling to sell tickets for Raw and Smackdown events. So that is a very concerning point for WWE. WWE is also experiencing increased competition from new and existing promotions like Impact Wrestling, which has been around for a while, and AEW, All Elite Wrestling. Vince McMahon, Mr. McMahon, has been synonymous with WWE's success. But what happens when he's gone? There is too much reliance on him, and there's no clear succession plan. Finally, what will happen to the licensing fees once they're up for renewal, given the declining trends in viewership? All of these factors must be taken into account when doing the analysis forward. Both of the major licensing fees were signed in 2018 for a period of about 5 years for Raw and SmackDown. There's some certainty about these amounts now, but what will happen if the networks would try to renegotiate the current contracts? And what will happen at the time of renewal? Will they re-sign? That's the million-dollar question. So in terms of the forecast, we started by taking the income statement, the annual income statement that we've seen before, along with the percentage of revenues and annual changes. I then proceeded to create a column for forecasts for growth rates for the next few years. My main assumption is that for the next 3 years, the current licensing fees with the broadcast networks will remain the same. They will not renegotiate them, but the increase will be due to increased film rights fees, as was discussed in the recent earnings call. Then in 2025, I assumed that the current broadcast licensing fees will not be renewed at the same rates. There will be a decline and it will be flat in 2026. For the live event line items, I assumed that there will be a significant increase compared to the previous year that almost had nothing in it. And in the other line items, I assumed minimal rate increases. And that is largely because of the lack of new talent being pushed by the company. Another major assumption I made is that the current number of shares outstanding will remain the same. And with that, we have an income statement forecast for the next 5 years with an earnings per share estimate of $1.44 for 2022, going up to $2.17 in 2026. We'll now use the results from the income statement along with ratios from prior years to arrive at a free cash flow estimate valuation for the company. We can see that over the past few years, the ratio of fixed assets to revenues has averaged 16.8%, and the net working capital to revenues ratio has averaged 20.9%. The operating margin was 14.2%, and the depreciation and amortization as percentage of revenues were 3.6%. We'll use these ratios in the free cash flow estimate. In essence, we're trying to neutralize the effects of depreciation, amortization, and interest and tax on the income statement to arrive at the true free cash flow estimate for the company. We will then discount these amounts into the present by using the rate of the WACC, the 11.8% that we arrived at earlier. With this analysis, the sum of all discounted cash flow is 3.6 billion. We subtract from it 793 million of debt and we'll arrive at a value of equity of 2.8 billion. Divide that by the current number of shares outstanding, which we assume will be constant at 85 million, and we'll arrive at a price target of about $33 per share, compared to the current price of about $51. Now let's look at some other ratios like book value per share and revenue per share, and we'll see that over the past few years, the company has grown both, which is a good sign. And we'll use these ratios in the next step to get some more valuation metrics. Let's look at per share valuation in peer companies which are similar in nature to WWE, however they won't be dealing in wrestling per se. Chose to look at competitors that have a live component as well as a broadcast component. To keep things simple, I used figures from Yahoo Finance for this analysis, and we can see that for these four metrics we arrived at an unadjusted average, which is just a simple average of all the figures there. But then we have to do an adjusted average to exclude the outliers. I then proceeded to apply the WWE per share figure to the averages, both adjusted and unadjusted, to come up with a matrix of valuation. As you can see, the current price is $51.37, and the table below shows the summary valuations we arrived at before. The overall average value from the table is 53.13. But if we exclude the outliers, observations 2 and 4, we'll arrive at a price of $41.54, which is 19% lower than the current share price. Some say that the recent cuts the company made are in order to increase the profitability for the company to prepare it for an eventual sale. Applying a 25% premium to the current share price will result in a share price of 64.21. However, it could be expected that the McMahon family would demand much higher premium. That could be a 40% or even 50%. Let's assume it's 40% higher than the current share price. That will result in a takeout price of almost $72. Keep in mind there's no guarantee of any takeover offer, and this is just speculation / hypothetical example. Let's have a look at the short report position from Finviz. It shows that 15% of the float is currently sold short. This is crazy. It means that WWE stock is a candidate for a short squeeze, but then again, nothing is guaranteed. So what's the bottom line here? What's the price target for WWE? Keep in mind that this is not financial advice, this is just my analysis, and you should always do your own due diligence before investing. Based on my analysis, based on the fundamentals of the company, I believe the share price could hit $41.54, a decline of 19% from current share price. However, if the company were to receive a buyout offer, all bets are off. What is your opinion of WWE stock? Let me know in the comments below. If you enjoyed this video, I would appreciate if you hit the like and subscribe buttons to help the channel grow. And let me know about this analysis in general. Did you like it? Was it too long, too short? Let me know. Also, let me know in the comments if you'd like me to review other companies. And do you prefer that I review stocks, cryptos, or both? Thank you very much for stopping by. Have a profitable day.